Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib, CEO of MBS Highway. This is created exclusively for NMP TV, and it's brought to you by our good friends at PRMG, working for your best interest. Man, there's a lot to talk about. I'm going to have to talk fast here to get it in for you. So we want to talk a little bit about the short squeeze that we saw, GameStop, stock market. How does it affect us? Hot real estate market. Listen, I've got to tell you, the real estate market right now is on fire. Over 20% additional sales, prices going up greater than 10% on an annual basis, and that's in the face of inventory being down over 20%. So all these things kind of make sense when you think about first-time homebuyers. They're really coming of age now, and that's going to continue over the next few years based upon births from 33 years ago. This is going to explode. Unfortunately, in Washington, they don't really understand this, and what they want to do is they want to give an additional $15,000 incentive. That's going to be a headache, team. Think about it. You're going to put more buyers in there that are going to want to take advantage of this. There's already a flood of buyers. There's already too many of them. All that's going to do is drive prices higher. Not to say that's a bad thing if you already own real estate, but just think about it from that perspective of that buyer. They're going to have to bid over asking. The property in many cases won't appraise because it's just going to go parabolic too quickly. There's not going to be comps yet for it. And they don't have the resources because they're a first-time home buyer to make up the difference of what the now LTV would be. It's going to drive you folks nuts. I think a much better idea would be address the problem, not exacerbate the problem. The problem is, as far as those individuals, there's not enough homes to look at or to shop for. And you can't do a move-up buyer do it because it's the same situation. If you sell a home, you've got to buy another home. The inventory situation won't be alleviated that way. Where it will be alleviated is if builders can build more homes. But lumber prices have gone up so much, and lower-priced homes mean lower margin, less incentive to build those. Maybe those same dollars could be used creatively for an incentive to build lower-priced homes to alleviate some of the costs involved, the regulation involved. Get those homes out there, and that could help. All right, I'll get off the soapbox at that. But here's what I do want to explain to you. What's going on in the stock market? Things like GameStop. I'm sure you heard about it. This is something that is a really unique situation currently, but it's happened before. And I know a lot of people are saying, oh, this is being done by the little guy trying to stick it to the man. That's BS, okay? This is a game and a scheme that's been around forever. It is a pump and dump scheme, and here's how it works. Now, if you are looking to target a company for this, and there's platforms now that make it easy, like Reddit, you look at a company that is heavily shorted. What does that mean? That means there's a lot of people in there with short positions. A short position means they've actually sold the stock in advance, hoping that the price comes down, and then buy it at a cheaper price in the future to make up that position. So you're selling it today, hope the price comes down, and then you want to buy it back cheaper, and then you have your profit. So you actually have to borrow shares today, sell those shares that you borrowed, but you still owe them. You're short those shares. So you buy them back in the future, you make money. But what if the price goes up in the future? Well, then you lose money because remember, you are forced, since you owe them, to buy them back. And because short positions theoretically have no limit to loss, there's going to be collars around them. So in other words, if the price gets too far away, you will be compelled to cover your shorts to buy them. That additional buying can make the price go higher. So you think about this scheme, it's looking at those companies that are heavily shorted. GameStop was shorted 140%. In other words, there was, for every 100 shares, there was 140 shares of it sold. Every 100 shares that were available in the float, 140 shares were already pre-sold, which had to be bought back. Obviously, if you use a forum like Reddit, you get a lot of people interested. They could push the price of that higher, force the short sellers to have to come in and purchase, and that would just put rocket fuel on it, and that's what you're seeing here. So this is something that has been around for a while. It doesn't end well. GameStop will end badly. It will come down crashing at some point in time because the company's metrics don't support a price something like this. It supports a price about $20 maybe. And now to see it at $400 or $500, it can't sustain itself at those levels. What you will see is this end badly. And this is reminiscent of a lot of things we've seen before where these types of disruptions in the stock market are signs of a late stage market that is kind of ready to at least make a correction, make a move lower. How does it affect us in the mortgage game? Well, a move lower in the stock market would certainly help mortgage-backed securities. We got news that inflation was a tad higher, but still low. Mortgage bonds reacted a little bit worse to that, but not too bad. But if the stock market does come back down, we will certainly see some relief in the mortgage bond world, already kind of hanging in there. If you're watching the 10-year Treasury, we hit exactly on the target we said it was going to go to. So it breaks 107, it's going to 1, hit exactly on 1, and then started to bounce higher. It's about 1% to 110 is the range right now. It breaks 110, you'll probably see it challenge some of those higher levels, but I think there's a good chance that things will cycle back down, especially if the stock market gives us some relief. Get on MBS Highway. I mean, we cover this beautifully every day. We lock to protect you ahead of that. I mean, goodness gracious, you should be successful right now. If you're not as successful as you like to be, we'll help you get there. And if you are successful, clearly you can afford to do this because that will make you much better for your customers, for your referral sources. We do so much more than locks do. And you know what? It'll help you make the investment in your most important asset, your mind. You owe it to yourself. Do it. Talk to you next week. Bye-bye.